And here we are. I am back live, my favorite day of the week because I get to talk to you guys directly, and we have a lot to talk about. I'm Lynette Zang, founder and CEO of Zang Enterprises. And of course, I'm sure all you guys know or are aware that Fed Chair Powell dropped interest rates by 50 basis points last week. So there, we have our answer. What's he going to do? 25, 50, whatever. So here's what they write in the New York Times. Big Fed rate cut shows optimism, turning from inflation to protecting jobs. I got news for you. Let's take a look at what the Magic 8 Ball says. Oh yeah. Outlook, not so good. You think? Let me show you why the outlook on inflation, on job creation does not look so good. And I hope I'm going to open your eyes, because I think that what I'm about to no, I don't think. I 100% know that the pattern shift that I am about to show you is critical for you to see and make sure that you are getting prepared, because the biggest challenge is timing. But will the Fed's emergency 50 basis point rate cuts in September cement a soft landing for the economy, something that has never happened? And this is by my friend, and by the way, you don't want to miss this interview. It's going out on Saturday with Michael Pinto. It was a great interview. We're talking about this even more deeply and the bond market, so don't miss it. But here are some fun facts he writes. The government has laid out $1.049 trillion on debt service, up 30% from the same period last year. Well, what's debt service? That's interest on the debt, except that they're not actually paying all of the interest. So the interest is going into the principal and compounding. If you are doing that with your credit cards, are you ever getting out of debt? No. So we're up to over $1 trillion on debt service year over year, up 30%. The budget deficit for this fiscal year is $2 trillion, up 24% from the year prior. The budget deficit for just the month of August last year was actually a surplus of $89.2 billion. Wow. Do you want to know what the federal deficit for August is this year? Well, it was a staggering $380 billion. So we went from an $89.2 billion surplus to a $380 billion deficit in 1 month. Oh yeah. Fed rate cut shows optimism. Garbage. Absolutely garbage. Their job is to lie and lie and lie some more. So this is really why. I'm going to show you why they really cut it and why they cut it so steeply. He says the real reason why the Fed cut rates by 50 basis points was to help out the Treasury with its soaring debt service payments. And how about all those corporate bonds, that debt wall that is rolling over now to these corporations that can't afford all of this interest anyway, let alone. So what the Fed is really trying to do in here is engineer that soft landing. Will it happen? Well, time is going to tell, but in my very, very well-educated opinion and looking at what's going on, and I'm going to show you more in just a second, do not click off of this. You need to see every single slide in this presentation. And by the way, put your comments below. We need to have this conversation, and it needs to be loud. Okay, so let's take a look, because gold price rally just getting started as investors digest the Fed's new easing cycle. But let me tell you, there are things that are happening that have never happened before. That's not optimism. That's fear. Gold's reaction to the Federal Reserve's 50 basis point cut and its signal for 200 basis points of easing over the next 2 years, right? So what does that take us down? That's 250 basis points, which takes us down to roughly about 2.5%. They are dropping those interest rates as fast as they can. Powell said the central bank is not in a hurry to ease interest rates and noted that the Fed is now in the process of recalibrating its monetary policy because yikes. Let me show you what I mean by yikes, recalibrating. I love the Fed speak. What does that mean exactly? That means they have to change because they see a crisis in the works. Fed officials' growing concern about the job market. So they're going to say, it's all about the children. It's all about the jobs. But quite frankly, you cannot turn a ship in a thimble of water. So this 50 basis point cut means absolutely zero, zip, zilch to the job market. But what do we see going on here? Concerned about the job market? Actually, in inflation risks. Pivot to rate cuts also reflects diminished concerns about inflation risks. That's also garbage because they know that dropping those interest rates, remember, the key tool that central banks have to regulate the rate and speed of inflation are interest rates. So when they want to slow the economy, they raise the interest rates and fewer entities or people typically borrow and spend. That hasn't been the case this time. But when they want to create inflation, they lower the interest rates so that more entities will borrow and spend. And I want you also to think about this because what we were just talking about is over the next year or so, them cutting, it'll be faster than that. I'm ready to put my technical neck on the line. This is going to be a couple years. This is garbage, right? This is going to happen very, very quickly and very, very soon because we are in crisis mode regardless of what they say. But here is what they say. We know that reducing policy restraint, which I'm going to show you their policy restraint, bear with me, could hinder progress on inflation. In other words, there's only one way to fight deflation, and that is with inflation. And that's where they're going. They're telling you, we want more inflation. And what does that really mean? That means that they're telling you that this dollar is overvalued and they're taking it down. That's what that means. That's what that means. At the same time, reducing restraint too slowly could unduly weaken economic unemployment. Really, they need more inflation, and I'm about to show you why. Because they feel that it's so much easier to deal with inflation than with deflation. Deflation is death to the central banks. Right? And remember, only one way to fight deflation. Let me show you what that deflation is. Because what you're looking at here is the M2 money supply. This is the inflation machine. Now, mind you, they took the M3, which is the total money supply, away from us in 2006. What do we need to know that for? But basically, look at this, because every single time we hit a rough patch, as you know, we grow more debt. And when we grow debt, we create money. That's what happens when we grow debt. So we got the M2 supply up to almost $22 trillion. And then look at this little teeny dipperooski. All it fell to was 20.7, but that was enough to hurt the economy. So it's starting from a very, very high level because I hope you can see that the rate and speed that they're creating money increases faster and faster, and they need more and more of it, and they're getting less and less result. But their concern is right here in this little blip up. So they've started this money printing machine all over again. And now we're up to just a little bit less than we were at the peak. 20.054 trillion in money supply. So when they create this money, it has to go someplace. So where does it go? It goes into stocks. And what do we see? Stock markets at all-time highs. But the value of what's out there every time they do this is less and less and less. That decline is deflationary. Only one way, not two ways, not three ways, one way to fight deflation is with inflation. And that's what the Fed just announced. Not because they're optimistic, everything is hunky-dory. No, because they are scared that they have lost control. And we're going to wait and see, because after this announcement, rates went up. Could it be that the bond market is recognizing the insolvency of the Federal Reserve? Does that mean that they'll stop paying their debt? No, all they'll do is print the dollar into oblivion so that they repay the debt with dollars that have zero value, right? This is exactly the same strategy that we are executing for your fixed rate debt at Zang Enterprises. Because I always think you should do it. The smartest guys on any given topic are doing for themselves. And we know what central banks are doing. They're buying more gold than they ever have in history. So the M2 rose by 29.3 billion from the previous month, okay, to that 21.054 in July of 2024. That is the highest in 17 months. So this transition back to more inflation was underway before this announcement, but this is going to supercharge it. And much as they want you to think that inflation is under control and that genie is back in the bottle, no. Their behavior is showing that they want more inflation. They are telling you this is overvalued and we're gonna pull more purchasing power wealth out of it. Because it doesn't matter how many of these you have. I mean, I'm a trillionaire with a Zimbabwe dollar that buys me zero. I don't want you to be in that position. And frankly, I'm showing you the dollar, but this is happening all over the place. Because what we now have is the absolutely probably one of the most critical pattern shifts that we have ever had. And what it tells me is that we are falling into a hyperinflationary event. And let me show you why. This is the Financial Conditions Index. I went back and I looked at a whole bunch of their Fed graphs, and I have to tell you that this is the first time historically when the Fed has done this level of easing into an already easy market. This is zero, right? So anything above this line are harder financial conditions. And remember, these gray lines, these gray bars, are official recessions. So when they ease, it's because we're in a recession. But now look at, we are pretty darn close to the easiest financial conditions ever. Because that's what this is really about. Transfer of wealth. By devaluing this and giving as much of this as they can to corporations and banks. And then what do banks do? They leverage that. So they make huge derivative bets that nobody even knows the true value at risk. But they are easing into an already easy condition. Because all that money that they've created since 2008, as I just showed you on the M2 chart, it didn't go away. And you know what? I want to point one more thing out while we're here. You've never, going back to 1960, as we were making the transition into the new debt-based system, Have you seen a pullback in the M2 supply like the one that we had? No, you have not. So that is huge. And their counter to that huge pattern shift is another critical pattern shift where they are dropping rates into already easy money conditions. This, my friends, is hyperinflationary. Only one way to fight that deflation. Those stock markets have to continue to go up. The real estate markets have to continue to go up. The bond markets have to continue to go up. These lies that hide the truth from you because you don't understand inflation. And by the way, they make things really complicated because they don't want you to understand it. But I'm telling you, this is a huge, 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 big deal. Oh. This is the first time that the Fed has ever eased into these financial conditions. Why don't you tell me in the comments what you think about that? Or if you have questions about that, because this is so important that you understand it. I hope we talk more about it when we're doing the live questions. I want to make sure that you understand this. And at any time, if I'm not explaining it in a way that you understand it, that's not your fault. It's my job to explain it in a way that you get it. So you let me know, and even if I explain it and you still don't get it, that's not on you, that's on me. Let me know and give me an opportunity to try and explain it another way, because this is the biggest warning that I can possibly give you. Can I have the slides, please? Thank you. Okay, this is your warning. You better take heed. And if you haven't done it yet, you need to call. Give us a call, so that we can set up your strategy and get it executed ASAP. 833-GLDZANG. But give us a call and make this happen, because the markets are hailing all of this inflation money. Woohoo! Happy days are here again. And the stock market, I mean, look at this. Here's 2008 when the QE money printing started. Well, that money has to go someplace. Is it the stocks being that much more valuable, or how much inflation are you willing to accept? Because we're virtually at the end of the purchasing power of this stuff. Officially, there's 3 cents left and dropping more. And that's what this 50 basis points is all about, is making you lose that reinvigorating inflation and making that purchasing power drop even more. What? So the stock market goes up? That hides how much trouble we're in? Because quite frankly, that's called a melt up. 2020, they printed more money than they did back in 2008. Did that money just evaporate? But yet still, it's not enough liquidity. Why? Because we are at the end of this currency's life cycle. And the sooner you realize that and accept it and get into sound money, gold and silver, I'm telling you, if we do not have a seat at the table, if we can't get a very vocal 3% globally to position into physical gold and silver, what they have in mind for us, we're not going to like it. We're not going to like it at all. But stocks hit record high a day after the Fed's big interest rate cuts, because they can now borrow, leverage more money and push stocks up. So you're thinking, isn't this great? You open up your 401k or your IRA or your brokerage account and go, oh, look at this, stocks are up. That must be, everything must be okay. No, because the more of this money printing they do, the less value what's already out there has, until it goes to zero. And yes, I do believe that we will see ZIRP again, zero interest rate policy, because all they have left is inflation. And the only difference between inflation and hyperinflation is the speed of that inflation. That's the only difference. And so what we're seeing in the markets are a melt up. Now look, this is a very typical pattern that we see going into a high and then hyperinflationary event. So you need to understand this so that when you look at what's happening, you are not fooled. Because they need you to stay in these fiat money products, because guess how much easier it is to steal your wealth from you. I say no. I say let's take our power and our control back, and we can do it in community. We can do it in local community to make sure that you have security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. There is power when we come together. Locally to make sure that you have security in all of those areas, and globally to make sure that we have monetary security, that what we work for isn't eaten up by the inflation that they've created. I really can't stand these people. I really can't. And they've got to be sociopaths. And they are. And I'm not saying that because I'm trying to be a little snitty. I'm saying that because they cannot care about how their behavior and their choices impact you. That's why I'm saying stretched valuations, stocks and bonds combined have rarely offered such low yields versus inflation. Duh. Because what drove the prices on all of this is inflation. And so that gap has gotten real narrow. And you haven't for a long time. You have not been getting paid to take the level of risk that you are taking. And you are not able to maintain the pace above inflation. Are stocks and bonds worth more? Or is this worth less and less and less? That's the truth. That's absolutely the truth. But here's another chart. There's two more charts that I really want you to pay attention to because, they may say purchasing power, but this is since 2008 with all that money printing. And mind you, we've already lost at this point over 97% of our purchasing power. But look at how much more rapidly that has fallen since 2020, because of all that money printing. It inflates fiat money assets, but it devalues the currency that you and I work for and we have to use as our tool of barter. Gee, why don't people understand that inflation genie is back in the bottle? 'Cause it's not. And it's about to come out to you in spades. And this is the spot gold market, which is a suppressed market, and how much that's gone up during that same time period. Even though they use the paper contracts to create so much more gold, and silver, same thing, so much more silver than actually exists in this physical world. But they can make it look like it until they can't. And we've talked about the breakouts, et cetera, but even 2,600, 27, 3,000, what have you, take your pick. None of that really shows you the true fundamental value of just one little ounce of gold for its primary function. So even in these manipulated markets, as I've shown you many times, gold and silver maintain your ability to purchase, and even with gold, then some. But this is what they reset the currency against, because gold is the primary currency metal. Silver is the secondary currency metal. Either way, and whatever it is that you do, you better be holding it, because that is the only thing that is truly outside of the markets and invisible to those that are in power. Take your power back. Be your own central bank. That's the way. That's the only way that you can really protect yourself. Also, coming together in local community. Look, go to a farmer's market. Volunteer. Find out who's growing your food, who's creating your food. Give them a day of your labor. I guarantee you at a farm, there's always work to be done. But if somebody is going to have to choose between somebody they know that has given them a day's worth of labor and somebody they don't know, if they have to choose who's going to get the food, guess who's going to get it? You be the one to get it. We've got to come back into community. We've got to help and support each other on a local basis and then on a global basis. Because if we don't have a seat at the table, and what that means is having a say in the new monetary system, if we don't come together and buy physical gold and silver, we're not going to have that say. It's that simple. And how's this working for you so far? The new system, the CBDC, the full surveillance system? Well, didn't Canada show it? You don't like what we say? Boom. Australia's got a new law that just came out, and I'm going to talk more about that next week. They're going to create an environment where you censor yourself. And they've already done that, quite honestly, where you censor yourself, you're not talking to each other, you're not coming together in community. It's divide and conquer. I say, let's come together and win. And now I'm going to take some questions. And oh, by the way, on the questions that came in from last week, we are going to do another video on just those questions where I will answer them. So today I'm going to do the live questions, and then we'll do that probably after this. Okie doke. Client question from Anthony Samples from Tennessee. What happens to the currencies that are pegged to the dollar if the dollar fails? That's a great question, Anthony. What do you think happens? Those fail too, because they're all fiat. And when you're talking about the pegging, historically, no pegs ever last, because it requires a weaker entity to behave the same way a stronger entity behaves. So whatever currency is pegged to the dollar as the world reserve currency, which is going away, well, we have more firepower, don't we? So every single peg always fails, and any currencies, period, whether they're pegged to the dollar, because most of them are either pegged to the dollar or they're pegged to the euro, right? Well, we're all in the same boat. So every single currency will fail, period, end of discussion. I mean, I hate to say that, but it's just accurate. And Grouper, New Jersey says, hi, Lynette, thank you for your wisdom. My pleasure. Thank you for being here. I am new to buying metals. My question is this. Why does the value of my pre-33 gold not increase with the price of gold? Does this have to do with the grade? Yeah, there are some coins that will move with the spot market. Those ones that have more blemishes, like this raw piece, right? Or even one that's like a Mint State 6061. So it's based on the population, how many are known to exist in that grade level, right? So the ones that have the most population and the most blemishes will indeed, they do move with the spot market. But when you get into those higher grades, so fewer blemishes, fewer coins out there, that is truly a complete supply and demand market. And what I've seen over all these years that I've been doing this is that those actually move first, and they move more. What is that? Oh, that's that. Okay, sorry about that. But so this is why the value of your pre-33 gold coins, if it is a higher quality level, lower population, that is truly a full supply and demand market. And those should actually be outperforming the ones that are closer and move with the spot market. And I've shown you that. You can see that on the PCGS 3000. You can also see that on the ultra rarities chart at PCGS. And my wife's Idea 10 gosh, what is going on with the prices today? I'm not sure what prices you're referring to, but it's called inflation and devaluation. And if you're talking about the price on gold, we've had a breakout, right? Can we go back to the gold chart, please? Let me show you. Okay, I didn't do it on this one because I've done it on so many others, right? And this goes back to 2008. Okay, so this is when they started the QE and the free money. But remember, this is a contract. This is not the physical metal. So they can create as much of that gold that does not nor ever will exist as they want to. And we can't even go in and see what that looks like because they changed the formulas to hide the truth from you. Their job is to lie, 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 and oh, by the way, let's lie some more. Okay. But if you're looking at this chart, here you can see 2008 and you can see the breakout in the spot market. I also put up a chart. Didn't we put up the chart that compared the spot market, gold stocks, and I know I just did that again recently, and the collectible coins. Can we put that somewhere? Okay, we can't do it live, and that's okay. But you can also call one of our strategy specialists and they can send that to you, or they can send you the image and the link so you can see. But, okay, so this is where it peaked back in 2013, and then we got this cup formation, right? But it actually broke out when it hit this new higher high right over here, as you can see. And then, of course, suppression, suppression, suppression. And we had 3, then actually 4 tops. And I've talked about this right along the way. But then it finally broke that resistance level. I don't know in this particular arena how high that's going to go how spot is going to go before it bumps its head. But of course, nothing goes straight up like nothing goes straight down. But this chart is showing that the markets fear inflation. And of course, we know that global central banks are buying more gold than they ever have in history. So if you're talking about the gold prices, then it's about the technical breakout and supply and demand, though. Is the Fed losing control of the gold market? We'll find out. And Keep It Safe says, how many ounces of silver to buy a decent house? Well, we could calculate that out because we know what the fundamental value of silver is. What's the average price of a house now? Something like 600 or something like that.
It's closer to 6 now, right?
Is it closer to 600,000? So with the true fundamental value of an ounce of silver somewhere around 2,000, then you can do the math. That's why it's better to do for buying real estate and houses. Gold has performed better because what you're going to see, and I know I hear all the time about what about that gold silver ratio, right? But what happens, and I've done lots of studies on this, where that ratio will begin to, compress. But then as we enter the hyperinflationary phase, it goes wider again. And gold always outperforms silver. Silver will definitely maintain your ability to purchase the same goods and services. So that's why I like it for barterability. I just did that in food, last week or something like that. So you can go in and look at that and you'll see that the silver will maintain your ability to buy the same basket of food, whereas gold outperforms because gold is the primary currency metal. And it is the metal against which those overnight resets are done. So what about, you can do the math on that, but my personal preference is to use gold for that function and define the functions that you're trying to accomplish. And that way it's the right tool for the job instead of buying something and then wanting that to really give you what you're trying to accomplish. Define what you're trying to accomplish first and then let that guide you.
Just a quick shout out to Yankee Stacking.
He is here with us
Yankee.
today. Appreciate you being in the live. Quick
Love
shout out
it,
to
love
you.
it.
Yankees in the house.
Yep, he's the best. And I love our interviews together, so I know we'll be doing another one probably reasonably soon. But Talk with Tiffany says metals are rocketing today. Yes, because the markets realize the insolvency of the Fed. It doesn't mean that they can't print more money. That's all they have, right? Interest rates and money. And remember, we've already had a structural shift. This is major in the bond market when the global central banks ratcheted up interest rates to fight the inflation that they created with all of this money printing. I don't know. They don't know how that happens because admittedly, Fed Chair Powell and Christine Lagarde, the two leaders of the advanced economies, have no clue about inflation. That's a little scary since their job is to regulate it. The rate and speed. Yeah. And M777AXY question. How many grams of silver are mined per person per year on Earth? Honestly, I have no idea. But what I do know is whether it's gold or it's silver, there is a finite amount of it. And it was interesting because just before we went live, Adam and Arthur were showing me this video on somebody doing something or other and creating silver. Well, no. Maybe they crunched up a rock like this. Ugh. It's pretty heavy, and I don't know if you can see, if I can make it sparkle enough, but there's gold and silver in this rock. So what's more likely is he had some kind of rock that he crunched up into powder and then was taking the silver out of that, because much as they've tried, they have never been able to figure out how to duplicate gold and silver in a lab like they have with diamonds. So I'm sorry, I don't really know that answer. And Benjamin asks, is it possible that the USA will declare bankruptcy before all those created dollars come back and would start hyperinflation? No. I don't think there's a snowball's chance in Hades that they're going to overtly do it. I think they just did. I think that big rate drop, that's huge. A 25 basis point, I think, would have been, I think it'll be as effective. So I don't really think they needed to drop at 50 basis points unless they saw something major. That's what that tells me, that they are scared, not that they're optimistic and, they've conquered inflation. No, they haven't. They have no idea what they're doing. They have no idea what to do because we're at the end.
And yeah, I'm guessing that also him pretty much saying, not guaranteeing, but pretty much saying by the end of next year, there's going to be another whole point dropped.
200
is indicative of something going on.
Mm-hmm. And remember, we're told that negative rates are a choice. We don't have to go by that. So yeah, I think that we will see interest rates back to the zero. I think we'll see ZIRP, zero interest rate policy, and I think we will see negative rates. But there's only one way to fight the deflation, which is what they're fighting now, right? And that's with inflation. And because of everything that they've been doing, and also because I definitely have been telling you for a little while now that it looks to me like we are at the very beginning stages of hyperinflation. This is going to become very apparent. It may not be until next year because we're almost in October, but this is going to be very apparent by next year, if not sooner. But, it's the election year, so they might try and, I don't know. We'll see what all of this means, but I hope you're ready for more inflation and faster inflation. And Judith and Dan Davis says, been stacking constitutional 90%, love it, love it, love it, coins to use for trade and barter. The economy will collapse. Me too, my friends, me too. There's a reason why they put in the Constitution that only gold and silver were money, because they already experienced what we ended up doing. And Sarge 27271 at Lynette Zang, if by soft landing you mean you mean crashing in the side of a mountain at 600 miles per hour, then yes, we're headed for a soft landing. I love you, Sarge. I'm right there with you. I'm right there with you. And Von Chi says, hello, Lynette. I love to read and study, and I've asked this question before, but what charts are the most important to look at daily or weekly? I'm learning, but also trying to teach my girlfriend. You know, honest to goodness, I think a really critically important chart is the monetary velocity chart, because that shows you the number of times that the money changes hands and is an indication of a hyperinflationary event. And that's been spiking. What are you laughing at, Adam?
Yankee Stacking said, put a 1 in the chat if you want to see Lynette's currency gun come out again. And we got a lot of 1s. Well, give him the currency gun.
But here's, okay, so hold on, because that's okay. That's like the hand that showed up. One day, we always used to do every single one of these live, and my daughter for a while was the videographer. And so she always forgot to turn my phone off. And my phone goes off in the middle of a presentation. And so I reached down, oops, see that? I reached down to grab my phone, and at the same time she was on the other side of the desk going like this. And then when I was reading the comments, I kept seeing thing, and I'm like, what are they talking about? But it was because it was like this disembodied hand that was groping. And yes, I love my money gun too, because this is really what it is, but I wish they would run out of money. And at some point, believe it or not, they will. They will hyperinflate us into oblivion. Okay, so I would go into the FRED, F-R-E-D, Federal Reserve Education Department, or, yeah. That's it. I'm sorry. I'm still kind of getting over all the work I was doing last week, and I haven't had a chance to rest yet. But anyway, go into the FRED. You want to pay attention to the purchasing power of the consumer dollar. You want to pay attention to the chart that I showed you is the M2 chart. So you want to look at the velocity of money, and you'll see that they're spiking. You can look at the debt levels, but what I really like about the FRED is up in the corner, and if you need some help with that, call us and we'll walk you through it. But you'll see up at the corner where you have the ability to click on it. It'll show you the next 4 or 5 most current data, but you can actually go in deeper and look at all of the spreadsheets and where they got that data from. When you're looking at the debt, what like Mike Pinto was talking about $1 trillion a day or whatever. Yeah, I think $1 trillion a day in interest payments. Well, back in 2009, I did just what I'm recommending that you do. And put in anything in that search bar and see what comes up, right? But when I did that back in 2009, because we weren't even $1 trillion in debt, we were just a few hundred billion, or maybe not even, in debt at that time, what I discovered is that we weren't paying all the interest that we had accrued. So that means that excess interest, again, was going into the foundation of the debt and compounding interest. So now at $1 trillion a day, are we generating $1 trillion a day in taxes? I don't think so, right? So that means that compounding is growing faster and faster and faster and faster and faster, which also then means that it's harder and harder and harder for the government to pay for things like, Social Security, Medicare, and all of these things that the most of the public actually count on to survive. So the interest on the debt is really overwhelming the government's ability to support the economy. And the only thing they have are more debts and deficits, so that's why the system has to reset. Let's see. Low blood pressure says Q, is gold, stocks, commodities, housing all going up the crack up boom? Yes, everything is going to respond to that. But don't be nominally confused, right? That's part of what inflation does, is it creates that nominal confusion, and this is what that looks like. And the easiest way for you to remember it is like this $20 bill was issued back in 1969 when we were still on at least a quasi-gold standard. And this one was issued in 1977 after Nixon handed over full control to the central banks on the rate and speed of inflation, right? Well, if you think about what this $20 bill would buy you back in, say, 1971, when the average wage was $10,200 and a family of four could survive with one wage earner, and looking at today where the average wage is something like 60 some odd thousand a year, and it takes two wage earners and they're paycheck to paycheck, even though nominally you go, well, I'd much rather have $60,000 than $10,000. What that $10,000 bought you back then and what that $10,000 buys you today, vastly different. That's nominal confusion. Don't be fooled. Don't be fooled. We have to wake up. We have to smell the coffee, and we need to come together in community and say no. That's how you say no, and do it peacefully. And Randy Welchel asks, question, Trueflation has real inflation at 1.14%. People are out of work. Where is the hyperinflation supposed to come from? Oh, that's a great question. Lack of confidence, because that's the only reason why this stuff has any level of viability. It's used in one place. What about this stuff and this stuff? It is used in every single sector of the global economy. This is a Ponzi scheme. It requires more debt, but mostly what it requires is your confidence. And when they put the system together, they knew that not one man in a million understands inflation, even those that are supposed to direct it. But they also knew that people marry the legal money of the state. And so I think you can see that they didn't want us to know that anything changed in 1971. So they keep things appearing as normal as possible. But consumer confidence dropped huge from last month to this month, right? And it's all about that confidence or inflation expectations. Because Henry Kissinger said, it's not what's true that counts, it's what is believed to be true that counts. Well, guess what? That matters until it doesn't. So the hyperinflation will come from people losing confidence in this stuff. I've already lost it a long time ago. But then again, I also have been, this is where I live my life. So trueflation, real inflation, 1.14%, was that a day or a week or but you know, it's easy to change formulas and make things look at anything you want. What's your personal experience? You think we're not having any inflation? Look at Japan, right? Japan, if you go in to look at inflation and food inflation and all of that, they've been in deflation since the 90s, early 90s, right? And so it looks like, no inflation. But actually, I had a viewer that lives in Japan reach out. And so if any of you are there, please share your experience wherever you are in the world. But yeah, prices for food and other things still went up. So they want to call that stagflation. What we're dealing with here, I believe, is way worse than stagflation. But that's where the hyperinflation will come from. When confidence in the currency is lost, then they go to this, right? We've seen it time and time again. Then they go to that. Okay, and J.P. Haynes asks, question on pre-33s. Should we limit ourselves to St. Gaudens, or will pre-33 Buffaloes and pre-33 Liberties work as well? Well, I think you mean pre-33 Indians, and yes, they will, and so will the Liberties. This happens to be a Liberty, so don't limit yourself to any of that. But I would also say this, because not everybody believes in the pre-33s. I have my opinions based upon my personal life experiences. And were you putting that question in from that person that even questioned whether or not my Uncle Al was real? Did you put that question in? Can you find that question easy enough? I'm going to address that. I thought that was really an interesting question, and I don't shy away from anything. And you don't have to agree with me, but you want to be truly diversified, whether it's from fiat paper and sound money, or it's the different kinds of sound money. So I'm just going to say that my personal preference is to be in a position where it doesn't matter if I'm right or if I'm wrong. If you take one stand, then you better be right. Whereas if you are properly diversified, even inside of a metals portfolio, doesn't that make the most sense? So then you don't have to worry, am I right? Am I wrong? Make sure that it doesn't matter. At least that's my opinion. And that's what I've done for myself. You do whatever you're comfortable with doing. I can't really tell you. Okay. Here's this question. And it's Pepe Pondu, right? Yeah. Okay. Follow the money. You sell gold. You create a narrative to must own gold. Clear as day. You did the same thing as a stockbroker in the 80s as you brag about weird flex GMA, and I'm not really sure what that means. So you were a conniving stockbroker in the 80s. Now you sell gold. Cool. Product is better, but I just don't trust you. I suspect your Uncle Al's story is embellished, if not entirely made up. But if not, show the receipts. I'm going to run away for just a second. I'm going to show the receipts. Give me a sec.
Now you guys got her getting receipts.
Okay, I'm back. So I told you many, many times that my Uncle Al was a major antique dealer, and he would buy the gold from the people and all of this. Well, this is what he gave me for my 16th birthday. This is what he gave me, and I don't have the books on the coins, but this is what he gave me for my 15th or 17th. I don't know. But he used to give me books, and I didn't pull some of the other things that he used to give me. No, my Uncle Al and Aunt Bertie were very, very real, and I was very, very close to them. And let me say, I show you why. I'm creating an incredible argument. Can you put this slide back on, please? Okay, here's the purchasing power, and this is from the Federal Reserve. This is not my data. This is the Federal Reserve's data. And if you go on the FRED, F-R-E-D, and I also, by the way, give you all of the links, well, most of the links, to my research, so that I'm good with you questioning me. I can't tell you to do something that I am not doing. As a banker, as a stockbroker and as a student of the economy, I study what these people say and also what they do. When their words match their actions, then I know they're telling the truth. But when their words do not match their actions, I know that they lie. They do not want you to buy physical gold. They need you to stay inside of their fiat money system where they can just rob you without you realizing it. Inflation is not a monetary phenomenon. It is a fiat money phenomenon because this stuff is created from debt. And when you have debt, you have to pay interest on that debt. I did not create this system, but I understand it, and I don't want you to get caught up in it. So I'm saying do what the central bankers are doing for themselves. So I challenge anybody. I don't own any stocks. I don't own any bonds. I do own this stuff because this is still our tool of barter, but by a lion's share, most of my portfolio is in this. So should I tell you to do what I'm not doing? Because then I'm not in integrity. I'm recommending that we all come together in community and create a passive yet quiet yet potentially effective movement in sound money. Booty, hooty, Rudy, Manooty. Why is that a bad thing? I don't get it. Explain that to me. But yeah, I do. I do want people to buy gold because that's what will protect them. And if I'm wrong, boo-hoo! You still have physical gold and physical silver in your possession. Boo-hoo. I don't know. Did I answer all that question?
I think you did. And Yankee Stacking actually wanted you to take a look at something. So do you mind if we pull open the chart real quick and have you answer a question about that? It's an FDIC report, chart 7. I'm guessing it has to do with is it the derivatives?
Money in the bank?
Give me 1 second. I'm going to pull it up for you right now.
Okay. Oh, yeah, the quarterly banking survey.
So what he wanted you to look at is the unrealized losses.
Oh, yeah. I just did that chart on that. This is great. This would be another place for you to look.
Yep.
Is the FDIC. I mean, it's something that I track. Look at those losses. I mean, come on.
That's crazy.
Yeah. This is why you want this, because that's a good thing. Are you kidding me? No. This is why you gotta have physical gold and physical silver, because this has no value. And the banks are absolutely insolvent. I don't care how much of this they print. It doesn't matter. I mean, look at how much we've gone from 800 billion in 2007 to over 9 trillion, and now they're running it off really slowly. And I showed you on the M2 supply that little teeny dip, which has not happened since the 60s. You think that means nothing? So I hope this person was watching. What was his name?
Yankee Stacking.
No, I know Yankee Stacking is, I love him. He's on the same page. Yeah, Pepe Pondu. Does he get clicked on this or something that he knows that I answered his question? Because I would love that.
No.
We can't tag Sam.
Oh, we can't. Well, then I hope you're watching, and if you are, let us know.
Yeah.
Because we want lots of comments on all of the videos that we're doing. It helps everybody, and I love questions, as we know. Okay. Amy Harrell asks, what is the effect of such a large amount of silver per troy ounce on paper, and what happens to payouts? I have physical silver, and my sister Middle has silver on paper. Okay, that's great. So when they can create a whole bunch of silver that does not or never will exist, it can impact the visible price that we see. And that's why we see silver, even though it's running, but still it should be way higher than 30 or 31 bucks an ounce, right? But a whole bunch of paper silver can suppress the true price, and you can't tell. Now, in the physical arena or also in the paper arena, what your sister most likely has is SLV or a silver ETF. And what that is designed to do is to track the visible price, the spot price of silver. But it is a diminishing asset because they daily sell off. Just read the prospectus. You can go in and search the prospectus and you'll see that they sell off bits of their holdings daily. And you can even go into their 10K and they'll show you how much they sold off last year. And if you go into stockcharts.com, and you can do this for free, right? So you don't have to have a subscription, or if for some reason you want to, call us and talk to a strategy specialist and they'll pull it up for you and show and send it to you. But you want to go into stockcharts.com and go into find a relative performance chart, right? There's a little area in the bottom right-hand corner, and you can push on that and let you go to a perf chart. And then, so when you do that and you put in the $ silver and SLV, it'll give you that comparison and it'll look like it's tracking it. But you can go all the way back to the beginning of when they first created that SLV, and what you will see is the distance between spot silver and SLV. So first it starts out right on top of each other, and then it starts to grow wider and wider and wider as they're selling off the holdings to pay the daily fees. Additionally, she cannot take possession of the silver because she's not an administrator. JP Morgan can, but the individual cannot. So you're actually holding the physical silver, and that means that it's invisible, it's outside of the system, and at some point when both of these assets, I can't give you a lot of guarantees, but here's one thing that my wonderful Uncle Al did teach me and showed me. Number one, he showed me how tangible assets move. And a number of you have noticed some of the other things behind me. So yes, I am, and also what I'm wearing. I am a tangible gal. But this is how all fine quality tangible assets work. They go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. And it's constantly moving in that, infinity sign. I would say at this point, we are like right about here. So we are still severely undervalued, but the gold fever and the silver fever has just begun, and there ain't no fever like gold fever. So we just have to be aware of that, and that's the difference between those two. Wolf asks, when there's a reset in the U.S., will the government actually redesign and reissue paper currencies? So far, they are saying that they're not going to take the paper away from us because we're used to it. And they want to keep things looking as normal as possible. So yes, they will likely be a redesign and reissue, and this will go away, and the new stuff will have a chip embedded in it. Because what they intend to do in the digital system is to, see, right now, this is a debt instrument, Federal Reserve note. A note is a debt instrument. So it's a debt instrument that neither pays you interest or charges you interest other than the inflation interest that gets charged. So even though you can't control your purchasing power with this, inflation's going to erode that, you can maintain your principal with that. They don't want you to have that ability. So the new issue will have a chip in it that will match the negative rates in your bank account. So no matter how long you hold it, when you go to use it or you go to deposit it, it will reflect all of the negative rates and that loss of principal. And they have to do the loss of principal because officially there's virtually no purchasing power left. So if there's no purchasing power left to inflate away, they have to attack principal. They know it doesn't work. They tested it and it doesn't work, but they're going to do it anyway because we're at the end. And Yankee Stacking says, Lynette Zang, number one, if you could only prep 5 things, what would that be? Well, I would prep sound money because I've got to have a foundation to rebuild on if I have limitations, right? And also I want to be in a position to take advantage of the wealth transfer. And I want the wealth to transfer my way and your way. So sound money, and then food and water, because you cannot live without that. Also security, because things get when people are hungry or hopeless, they make choices they would not otherwise make. So that community piece is the one that is arguably the most important, because we just don't have the same kind of time that we had when I started my urban farm and even my bug out location. So we really need to come together locally to invoke that security and make sure that you can eat and have food, and there's more power when we all come together, right? We're a whole lot more secure. So community is arguably the most important, but then all of those others. Maybe you don't have time to build a big portfolio or you can only afford silver, something like that. Well, guess what? I don't want to say this because I don't want to flood, but you know, if you're part of our community, you're going to have the food, you're going to have the water. So if we can come together and make all of that happen, and those are the 5 preps that I would do. And what 5 food preps would you prep first? Live food, so gardens, and that's exactly what I did do. And then also looking at and also chickens, right? Chickens can scratch in the dirt, they can eat the weeds, they can, there are ways that you can feed them and they can create that protein. So your live food, whether it's gardens or it's chickens, or if you have the ability, I know my sister has a cow that is about to give birth. I checked before this and she hadn't given birth yet, but something that is like ongoing. And I want to tell you too that as we're adding to our animals, we're doing breeding pairs. So 2 females to 1 male of whatever it is, so that we are sustainable, right? And we can keep creating that more food, whether we're just eating the eggs or frankly, if we're eating the birds themselves or drinking the dairy or what have you. And then also long storage, right? I have enough food, long storage food, which are like rice and beans or, grains and legumes. They make a complete protein. And so I have enough food for 6 months stored for 40 people. So that if that happens at any moment that it happens, and maybe I don't have my gardens going, but I have my long storage food. How many is that? That's 4? Okay, one more. 5 food preps, okay. And then it's also like the canning, dehydrating, freeze drying, putting food back. So fresh food that I can rehydrate and eat. And Jason is obviously fabulous at that. So that's what I would do. Great question, Yankee. Thank you. And Tony asks, those that retired during the 2008 crisis, did they go back to work because 401k dropped in half? Anyone experience that? Has anyone experienced that? Yes, a lot of people have had to go back to work and come out of retirement because they lost the wealth that they held inside there. But I would really appreciate it if anybody that's had that experience would pipe up, and then you could let us know. And El Pasito de los Miércoles, what do you think about Millet saying he wants to restrict government expending and printing, but wanting to dollarize at the same time? Isn't that interesting? Because that's exactly what we're doing, isn't it? Just printing and expanding the money base. We just happen to have a little bit stronger horse in the glue factory, but both of them are in the glue factory. It's just that the dollar is a little bit more recognized, but in reality, the public needs this and this. Sound money. It's the only way you can protect yourself from the fiat money and what's happening. And DJG009 asks, hey Lynette, did you see U.S. lawmakers prepare for mass casualty event, bunker time? Well, I have seen that over the world, over the near history, especially since 2008. But is there a specific thing that you're referring to? And I might not have seen that. So if you let me know, I'll take a look.
Yeah, they might actually be referring to, and again, this is just me kind of speaking out of, what I heard was actually an asteroid that's course corrected and should be here in 2034 or whatever. That was one of them I heard, and Congress knows about it, and they're preparing for a mass casualty event.
Yeah. Well, okay, so that could very well be. Is that what you were referring to? Is there something else? And do we know where it's supposed to hit?
No.
Okay.
Not at all. No.
But I do also know that the wealthy have been building their own bunkers, like I have in my bug out location, right? Because desperate governments do desperate things, desperate people do desperate things, and when we go into this hyperinflationary mode, which will certainly happen way before 2035, in my opinion. I mean, I can't guarantee that because it's not something that's within my control, but I see it. I see it unfolding before my eyes. I just am not quite sure exactly when. All confidence will be lost. And Benjamin, what's up with that chart technical gap at around 2.150 gold? Will gold flash crash there and make a V-shaped recovery? Let's go back to that chart, because whenever there is a gap created, the gap will be filled, period. It doesn't have to flash crash down. It can do it more slowly and fill that gap and go back up. But 2150, let me see. Let me make this a little, can't make it bigger on this. Let me look. 2150. You know what?
Do you want to pull up in the actual chart, the technical?
Yeah. Could you do that and make it big instead? Because this goes back to 2008. It'll be easier for me to see the gap if you just do last year. And why isn't 10-year trade? I'll answer this, and then we'll go back to Benjamin. Low blood pressure asks, why isn't 10-year Treasury moving down with all these cut promises? Isn't that a good question? Because the bond market doesn't trust the Fed. Also, the other thing to think about is, why are all these corporations issuing debt? I mean, if they've got to roll it over now, okay, I get it. But they're issuing a whole lot more debt up at these levels when the Fed has already promised to basically lower rates, right? Why are they doing that? Because the markets don't believe that the Fed can really control it, because I think they can't. And bond vigilantes can be, they can turn the tides. And I believe absolutely overwhelm the Federal Reserve's ability to make things even appear okay. And Boggin, we'll come back to that as soon as they figure that out. Okay, Boggin asks, I have a question about the price of the gold. JP Morgan short position versus gold is higher than their assets. When the stock crashes, how would the scenario for gold go? Well, since these are all sorts of paper contract, and we've seen it over and over and over again, and because stocks are typically, by most of these institutional investors, bought on margin, in other words, borrowing to buy, when the stock market implodes, they get that margin call and they have to come up with more money. And they may not want to liquidate their gold holdings, but that may be the only thing that the market will bear or is willing to buy. So when a stock market implodes, you will see frequently the spot gold and the spot silver charts also go down with it because they have to meet those margin calls. But at the same time, what you also are likely to see is that in the physical only world, even though something like this or something like this moves with the spot market, when demand exceeds supply, the premiums go up. And so, like we experienced in 2020, the premiums on both physical gold and physical silver were huge, even as it was tracking the spot market. And Andrew Middleton asked, isn't hyperinflation also when all the public realizes it gets out of the currency? Yeah, exactly. That's exactly right. That is that loss of confidence. That's why they're always checking consumer confidence, inflation expectations. You know, it's not what's true that counts, according to Henry Kissinger, is what is believed to be true. Yeah, well, yes. Hyperinflation is when the public no longer believes the lie. Absolutely. He can't pull it up. No. We're working on being able to pull things up and roll things as we're doing this so we get it more in real time. Can I do it on my laptop?
Yeah, do it on yours. Do yours.
Oh,
that
okay.
was the last question, by the way, so.
Okay, that was the last question. All right, so let me just go here, and you can see, all right. And here I'm just going to put in, I've got 17 years. I'm just going to put in 1 year. It'll be easier for me to see that. 1 year. Okay, here we go. Okay, so I think that this,
You have it on your screen right now?
I have it on my screen right now.
Give me a second.
Okay.
1 second.
We will figure out everything and do anything we can to help you understand what's going on. We are absolutely committed to that. But this might have to wait until,
Yeah.
it's going to have to wait until next week.
Guys, sorry.
This was yesterday's close was 26.52, but I see what you're talking about. And actually, that gap was actually already, is there some way, wait a minute. Can I do this and put it on the PowerPoint?
Yeah.
Yes.
Okay, hold on a sec. Give me a sec. We'll get this done. Let me just, new slide. Okay, let me get rid of this, and put this on. Okay, so I'll go to slideshow, and it's gonna go, okay. All right, so this is the spot chart, spot market, like now. And let me grab a laser point. Okay, so I believe that this is the gap that was being discussed, but I don't think it really actually has to gap down, because can you see this little red line here where I'm pointing to? It already did it. So it actually doesn't have to go in and fill that gap, because that gap has already been filled. Okie dokie.
Yeah, the gap that he was
2,150. Does that change anything in your analysis?
Well,
a gap around 2,150 is what I'm showing.
Well, that's what he's saying.
Right.
And it could be this little gap
Right.
here.
Right. And I think the follow-up was like, will gold flash crash there and then make a V-shape?
No, I don't think it'll see a flash. You know, it wouldn't be quite as powerful if it flashed and then just went back up. But Yeah, I mean, the biggest gap is right here that I see, and it's filled. So, well, this is great. I missed you guys last week. We've got not until November when we're going to Australia, but we are going to try and figure out how to do these live when we're in Australia too, because I don't like missing these. This is really my favorite time because I'm actually getting to spend it with you. And for those that were at the Peak Prosperity event, you know, I met lots of people and lots of people from Phoenix. In fact, I think somebody came by this morning, a very lovely family, came by this morning for a little tour, and I'm pretty sure they were from Peak Prosperity. It was a great event on so many levels because they were talking about the mantra, which is so important. Food, water, energy, security, barterability, wealth preservation, community, and shelter. This is what this is about. Help us build the local and the global community. And make sure that you give us a call and leave comments. Really, let's have this conversation because any questions that you have, at least 100 people have the same questions, and any comments really helps fill out all of our community's knowledge base. So until next we meet, please be safe out there. Bye-bye.